Good morning, ladies and gents. How you guys doing? Good morning, ladies and gents. Morning. Ooh, market bear is showing up here. How you guys doing? Good morning, ladies and gents. Morning. Right, as we're going live, eh? Market bear is showing up here. New 5-minute candle. Market bear showing up. Morning, ladies and gents. Morning. Right, as we're going live, eh? Market bear is showing up. Warning, new 5-minute candle. Market bear showing up. Morning, ladies and gents. Bears now. Right, as we're going live, eh? Market bear is showing up. Warning, new 5-minute candle. Market bear showing up. Morning, ladies and gents. Now. Right, as we're going live, eh? Market bear is showing up. Warning, new 5-minute candle. Market bear showing up. Morning, ladies and gents. Now. Right, as we're going live, eh? Market bear showing up. Warning, new 5-minute candle. Market bear showing up. Morning, ladies and gents. Now. Right, as we're going live, eh? Market bear showing up. Warning, new 5-minute candle. Market bear showing up. Morning, ladies and gents. Now. Good morning, miner. How are you doing today? Thank you for tuning in. What does what sound like what? What are you talking about? All right, let's take a look at market first, and we are for sure gonna take a look at Tesla. I'm assuming you didn't watch yesterday's video. Come on. All right, SPX. As we discussed in yesterday's video, we had 14 hours from the close of this candle to confirm whether if that market red flag is gonna be confirming. So far, it looks like it is confirming. Now, just for a quick recap, we're not going to go into too much detail because yesterday's video was specifically released in addition to our regular schedule just to cover the market. So SPX, the first warning sign was back here. This was the strongest bear price action, even though the volume wasn't really there, but it was a warning sign. The way I see it, it was a warning sign. And then oh, forgot to cover. So this was the strongest bearish price action ever since the beginning of the bounce from the GP back here on October 13th. So a whole month. And that was a warning sign. And then they formed a wedge at the top. And now we're confirming. And the reason why I said that there is 14 more hours is we wanted to see after this close of under the 8-hour 8. The only one we had was back here, was immediately bought up. So I wanted to see what that next two candles look like, whether it's going to be immediately bought up or if it's going to be continued bear pressure. So far it looks like it's continued bear pressure. So the red flags are confirming. NAS is currently down 0.55, the weakest of the three indexes this morning. And as we discussed before, we did not discuss this in yesterday's video, so let's take a look at this again. This is QQQ over IWM. The anticipation was an ABC pattern, and so far we are seeing a rejection from that trend line, long-term trend line, rejection, multiple supports here, and then we're back testing and now coming back down. So going forward, would still anticipate QQQ to be weaker versus the RUS. All right, so that's basically the market. Red flag confirming. Early signs of bearish price action. Now, for those of you that are thinking of playing oversold bounces today, I would caution you to maybe give it a little bit more time. So if we're to, and the reason why we say that, let's take a look at Tesla, for example. Yesterday was down 12%. If you were to think of playing oversold bounces, any tickers, this would probably be on your top watch, just because all previous new all-time high straight into potential of 4-hour oversold with extension on. Regulars, not so much yet, so I probably give it, one of the reasons why I would say I would probably give it more time. The other reason is the most ideal oversold bounces are generally played on a gap down below a key resistance. So in this case, for Tesla, for example, I would say, of course, 1,000 even being the psychological support. There was no resistances, no supports, not really any formed from back here all the way move up. I can't see short-term wise, maybe this one. Or you can see rejection, another 1, 2, 3, 4 rejections on the 4-hour candles. So that 1044 was supposed to be a little bit of a support, but we did break right under it yesterday. Slight support from down here, but regardless, back to the point of playing oversold bounces based on how the market is opening, you know, about 0.3% down. I would say give it some time, give it 30 minutes, 15, an hour. I would probably do 32 an hour first. See where the market is going first before you get into an oversold bounce. Stream was resetting and repeating. Oh, that's interesting. Yeah, I hate, the part of the reason why I hate streaming is because of the weird things that goes on with it. It's finicky. Anyways, so Tesla, you're looking for a retest of 1100. I can see that. And that was the anticipation. So let's see where the gap down opens at. Ideally, I want to see a gap down below 1,000. Actually, let's take a look at the extended hours. Oh, so close. We are seeing bearish pressure right now on the. So if we were to look at the 15-minute chart, you know, lower high, lower low, and then now a lower high, potentially a lower low coming in again. If that is the case, we will be losing 1,000 psychological support. Then it makes a little bit more ideal for oversold play, but I still don't like it as much just because of the minimal gap down we are getting after this kind of huge bearish pressure with volume. I would anticipate ultimately lower prices to come, and that's why we're thinking of this. I guess ultimately the anticipation should have been something more like this. Gap down below 1,000, a bounce might not be that high, to be honest. Let's take a look here. If we were to draw a fib to below 1,000, 0.5 might be a bit too strong considering yesterday's bearish pressure. So 0.382 makes sense, just under 1,100. Right, so that's Tesla. Next, we're going to discuss my personal top watches for today. Ooh, there's a lot of gap downs happening, eh? ARK gap down, PLTR. Basically, everything is gapping down. What am I seeing that's strong? Anything strongish out there that's not a gap down? MRK looks okay, flat open so far. GME flat open, which is one of the top watches, by the way. Alright, so top watches. And for those of you that are tuning in early, so far I'm seeing minor only still. So let's take a look at the top watch. Lucky you. First one, where to go? Airbnb. And thank you for joining us, our newest 24/7 trading chat group member, Darren. 7-day free trial. Make sure to check it out if you haven't done so. There's no hidden fees, no nothing. Straightforward. Alright, so Airbnb gonna be one of the top watches today. We saw reversal candle, shooting star. Decent volume, is decreasing bear so far, and the reason why I'm thinking is top watch is gonna be previous all-time high, potential very likely. Wait, sorry, not all-time high, all-time high zone that got rejected, and then came back down, and we're now gapping down. Ideally, what I wanted to see a little bit more gap down into that 88. That would have been the most ideal oversold bounce, and there is still a chance. I mean, there is still 50 minutes in the market bearish price action is showing up, so there is still a chance that we'll gap down into that 88, which could provide decent oversold bounce plays for not only Airbnb but a lot of other tickers as well. But Airbnb is on one of the top watches today. Gap fill. I don't see a gap on the Airbnb miner. Or are you talking about this gap? Second top watch, AMD. And generally, I don't like to use extended hours just because from experience, if you give the market 30 minutes to an hour from the open, I mean, those are the most profitable hour to be trading, but you need to have your direction right, on point. Okay, so next top watch is AMD, and the reason why I say this, similar idea to Airbnb, we are gapping down to yesterday's low. Yesterday's it's not exactly a reversal candlestick. It is in blue sky breakout mode. There is no resistances. There's no supports. The chart still looks relatively strong to me, even though it's in a daily overbought position. Let's take a look at the 4 hours. Actually, let's take a look at the hour already. Already there is a bear divergence. So far, it's looking like lack of follow through with these lower wicks. We are opening down lower, so there is a good chance for, if I was looking for oversold bounces, this blue sky breakout tickers are generally better. The other one is Amazon. Hey, how'd you know I was gonna take a look at it? Earnings gap. Okay, let me take a look. Earnings gap. Oh, this one. Wait, no, we're talking about Airbnb. Oh, that gap. Yeah, it will eventually. Come on, TradingView. It will eventually fill for sure. But first of all, we're gonna have to watch for the reaction at the 88, which is right around that lower part of that gap. The other reason why I think it might, if I were to think that it might not fill, it would be because of the price action on that earnings. Not only was it a gap up, it was straight gap up buying and closing near the high of the day. And that's why I think ultimately the chart is really strong still. Ideally, of course, if you're looking for the most ideal entry, what you want to be looking for is gap fill lining up with that trend line right around that support resistance from all the way back here. So that would be the most ideal entry at about 178.88 before another. I can see this having another bounce. Ultimately, Airbnb, I do believe it will have new all-time highs coming. Wow, that's a lot of lines. Let's clean this up. Anyways, so back on track with Amazon first. Remember, double fake out pattern. Chart is extremely strong comparing to the market. Look at the minimal gap down that we're having on this chart, 0.31% only. One of the most bullish charts out there that I can see on my 24 charts. I mean, there are other ones. There's Lucid, there's FCell. Actually, FCell is really strong too. AAL, you know, fairly really strong, I would say. Regardless, Amazon is on top watch and will remain on top watch going into the end of the month. Okay, we did break over this key resistance again, so 35.54. Actually, why did I not buy that? Oh, because of this. So 35.50s, we can see multiple rejections. 1, 2, supports and then reject again here. Oh, the only reason why I didn't buy in on Amazon is partly because of this candle, as well as I'm going to show you guys a little cheat code here that I use. So this is one of the indicators I use. I like to call it a cheat code. This is called the linear regression. I haven't shared it too much on our videos. I do share it with every single new member. So Darren, I hope you're watching this. This linear regression, there is pros and cons to it, just as with any indicator. But so what this does is it generally does not trend outside of the upper trend line as well as the lower trend line, unless there is a trend reversal coming, which it looks like on Amazon is coming. So the other reason why I didn't buy it is because we are at that upper trend line for the linear regression already. If the trend is going to be reversing, and there's room for reversal too. So ultimately, this linear regression, the way it works is it updates as the chart develops, meaning as there's more candles develop, this could start curling upwards, as long as it does not make this one too far outside of the lower trend line, it would still be valid. It's meaning what I'm looking at potentially is high. That's yeah, that wouldn't be too far out because it would curl the linear regression. So it would come to the and then back test this key support resistance before new all-time high. Amazon, amazing chart, extremely strong. Ooh, market is still bearish. Extremely strong. Keep it on your top watch at the very least for this month. Okay, ideally what I want to see is a daily higher low. That would be the entry. So even if I don't enter right here right now, ultimately I do think that there is going to be a back test. Actually, let's it might actually go a little bit higher to that resistance. So there should be a back test kind of thing, and that will be the entry for the actual move. All right. BA. Oh wow, we haven't not taken a look at BA as much. And thank you, Miner, for keeping it strictly professional, just requesting tickers. So let's take a look at BA. Trendline rejection. I hate playing this name. I hate playing BA. This was the wedge that we were tracking before, and with the way it looks now, it really gets you sometimes on BA, especially on BA. This kind of gap up and buying, you would have thought that this is gonna be the wedge break, but on the last time we discussed it, I can't remember when, it's not too long ago, I did mention that there is a potential, just depending on how you draw the wedge, there is a potential of this trend line, and we usually draw it based on the higher close as a starting point. And the reason why I discussed is because on the line chart it works a lot better. So we usually draw it from here, but I wanted to see what it looks like from here. Ultimately, this was the key trend line to break, and we are seeing a rejection from it again. BA didn't gap fill. There is still a gap here. Filled gap yesterday. It didn't gap fill. Gap fill is at 215.75. Ooh, that is looking very sexy though. BA, so sexy. Look at this. So it's I guess wedge within the wedge, or a double wedge, or whatever the hell you want to call it. However you draw it, this ultimately was, I would still call this a trend line. Look at this, perfect rejections, right? Even this one is still a perfect rejection back here as well. So I would still use this trend line, and based on this trend line, look at this, bull break, reject from the must break trend line, and then back test that daily 8, just so close to that wedge upper trend line back test. I want to see ideal. So this is a little bit concerning because of how little it left, but the good thing about it is look at that lower wick. So the chart to me is strong, and from here I will set an alert. So thank you for bringing this to my attention, Miner. I will set an alert. I guess the old one either triggered or expired just under 225. So depending on today going into the rest of the week's price action, if we're to break bull, this could be a very nice chart to be playing. Long-term wedge, long-term descending wedge all the way from February. The other one, the other couple top watches I have on my list today is GME being one of them. Look at this. Sexy daily. Not too sexy. Daily bull flag, but yesterday's candle is a little bit concerning because it is a dark cloud cover. Daily bull flag, huge upper wick, minimal bear volume. That's what I love about this chart. Minimal bear volume. I am playing this through commons for now. Will very happily add calls to it as long as TD works. It's been having trouble for the last 2-3 days. As long as TD works, I would be looking to add calls when this is starting to confirm. But just playing through reduced sizing of commons for now, just because of the dark cloud cover. Want to be a little bit more cautious in case this does continue. And so far we're seeing very slight gap down. GME is the other top watch. What I have is this one is not so much a top watch for me, but the bounce play potential is still there. Double bottom, 49.11, 48.93. We do not want to lose yesterday's low of the day, 48.93. Let's see if this actually plays out. And BBBY looks like it's gapping down a little bit. Now BBBY is very interesting. That shares buyback announcement, $1 billion worth of shares buyback. The company is only worth 1.6 last time I checked. Oh wow, a lot higher now because the shares went up, so it's 2.1 now. 1 billion regardless, it's like half of the company, right? So huge gap up, straight selling. But from there we are holding, it's not exactly a very nice zone to be discussing, around the 0.5 area, and we saw bulls coming back in. Ultimately there is some upper wicks here. I do believe slight lower prices will come. There will be a better entry. I want to see that daily touch of daily 8. That will be the most ideal entry. I do still want to get in BBBY. Oh yeah, with airlines reopening, so the top 2 sectors to be watching for the rest of the year, I would say, is 1 is reopening, 2 is marijuana. Those are the top 2 sectors to be watching going forward. Just to give you an idea, Airbnb we already discussed. AAL, we talked about this yesterday. Extreme strong strength. Look at this, long-term resistance, support, resistance, another 2 rejections, and then we are closing above it in market consolidation. We are seeing a slight gap down today. This actually would potentially be a very nice entry right here. Look at this, it's gapping down into the solid body of solid body of here, and then here as well. The close, I mean, or open, depending on red or green. But this could be a very nice, with the amount of the rest of market gapping down. This one is gapping down 1.57%. I consider it very strong for AL. So that's just an example of reopening. And the marijuana, we'll just discuss the ETFs, so make it easier. I wonder if there's a reopening ETF. Let me know if you know if there's a reopening ETF. It will make the chart review a lot easier to discuss as a sector. So MSO is one of the ETFs for marijuana. This is the US based cannabis. I can never remember what it stands for. MSO. Anyways, look at this daily trend reversal, amazing. The other one is hummus, that's the Canadian side of it, and daily trend reversal, amazing. Slight gap left behind, but the chart is strong. Just to show you another example with individual ticker name, TRY, decent sell-off yesterday, straight buy up. Another one, VFF earnings kicking it off, MJ earnings season, huge bull pressure. Gap up, sell off, gap fill, immediately bought up, continuation. Yeah, marijuana and reopening are the two to be looking at. Let me check. I guess the trading group people mostly left their press the snooze button this morning, eh? And obviously I should be. Can't even talk straight. All right, next one is MU. Oh, that's nice. Wow, how long has it been since I looked at this chart? No key zones, no supports, no resistances drawn. That's interesting. Short term trend line. I don't like this trend line. See how this one works better. Nope, does not. So this is a very obvious key zone. You can see rejection here, support here. So it broke over and then back tested support, and then support again. Yeah, you might be able to draw a little bit lower. Actually, because of these being wicks, you can draw it lower, but the way I like to draw is probably just use it as another support here. And then another rejection in that key zone, multiple rejections here on the lower part of the key zone. And now we're seeing a slight rejection on the top part of the key zone again. And what we're seeing is somewhat of a spinning top candle. And TD mark is, what is it called? Tom DeMark. Tom DeMark is showing 9. Generally, that is a signal for potential reversal. So trend line. Okay, so this is the money line. Multiple bounces here. Broke down under. Chopped around. Back test before another leg down. I would call this a little bit of a lack of follow through on this low. So there's a support here. Yeah, so broke down, lack of follow through, and then bouncing. Chart looks nice. Now we're gapping straight into that lower part of the key zone. Back testing this most recent resistance. I like it. Personally, I would give it another day or two first. We are a little bit extended on the daily. And this is potential reversal candle with Tom DeMark being 9. There is a potential of this chart. Let's go draw it from today's open. Straight going into backtest the money line before forming a daily higher low. So there is a chance for that. Chart is strong. I would give it 2 days. I want to see what the price action looks like. I would set an alert. Let's see. Most ideal entry would be probably around here, around that 88, and then an alert on this yesterday's high, just above it. All right, so let's see what happens on MU. Next is, you have a lot of tickers, eh? All right, UPS. Wow. Old chart. What an amazing break. Wow. Look at this wedge break, immediate back test, and just went. This was 63% run. 39 trading days, so it's not as aggressive. Let's keep that there. I like seeing that. Is there a money line on this? Doesn't look like there's a money line on this. Oh, maybe there is. Nope. Not seeing a clear pattern on UPS right now. There's just a lot of chop around. Huge bull move. Slow bleed. Gap down on earnings. Gap up on earnings. And this one was gap up on earnings. So there, due to the lack of follow through on new all-time high. Now this is very concerning because the lack of follow through on new all-time high, straight rejection, slow bleed, most ideal. So the trend line should work. Reject, reject, chop around, double reject. Okay, yeah, so the trend line works. I'll probably draw it here kind of thing. Most recent rejection. Alright, so the most ideal entry that I'd be ideally waiting is 1, 2, next 2 days, 2 to 3 days, back test, gap fill right here before another leg up. But seeing the last time's price action, there is a potential for continued bleed. So what I do is set an alert here, low risk entry, gap fill, and then put a stop. There's not many supports around. Technically the support is just under 200. 5, so 2% risk. That's somewhat worth it. I am live here currently every Wednesday morning. Do you like watching morning lives, Miner? And part of the reason, so we tried morning lives before as every second day, but I decided to stop that just because a couple reasons. One, there's a lack of viewers and people tend to miss. I find that a majority of the people have more time watching after their work hours. So when I post videos, there tend to be a lot more people watching. So there's a more benefit to the viewers versus live. But if you do you prefer morning lives? And the reason why we started back up is because of our newest member Darren's suggestion. He likes morning lives, so, which is, come on, you're not here, man. But yeah. He said morning lives, a lot of people might benefit from it, so we're looking to start it back up. You're in California. What time is it there? So I'm located in Calgary. Currently it's 7:05, and when I do do morning lives. I like to do it at least an hour before market opens. At least that gives time to discuss the market as well as some individual ticker names. Also go over what the top watch of the day is. I find that should provide the most benefit to our viewers. Should. So key support here. Ooh, that would make sense. Gap fill, well, maybe not so much. 605. Wow, you are up early. Started watching at 5:30, eh? Yeah. How you like our content so far? Well, you're here, so thank you for watching. 5,800. Yeah, prediction on Amazon ultimate high in next 2 months. Let's take a look. It's gonna be new all-time high. There is gonna be. It's just a matter of when and how long it's gonna take to get there. Now, what is this? I guess it's one of the. Yeah, this could be the ultimate new all-time high. This is fib extension using the lows here to the highs to the higher low. GP is around that 40.61, but let's take a look to see if it lines up with anything. So we'll use this low, the breakdown fake out, the breakout fake out as the high. Come on. And then the GP as the higher low. Now what does that bring us? Wow, would you look at that? Right there. 40.67. That will be the first resistance that we're looking at. I imagine it's going to take quite a bit of time. So even just by this kind of drawing, we're looking at January. Wow, look at the date on that. That's the monthly expiry for leaps right now. January 21st. That exact date is the leap year. So potentially, 4K leap year is looking very possible to be in the money. So the two extensions, one being pandemic low to the high to the higher low, the stall, the long-term stall, the GP is around 40.61 to 41.23, and then the breakdown fake out, the shorter term breakdown fake out to the breakout fake out to the higher low, the 1-to-1 extension target. So just to show you what I mean, if you were to do settings here, you can select different types of extension targets, 1-to-1 extension target for the shorter term, and then the GP for the longer term. Oh, I had the one checked. The GP for the longer term, both are indicating 40.67, so I would anticipate a strong resistance around that area. $4,600. That's not bad. The only thing I would say that for that 4,600 call is probably there's a little bit less volume, a little bit less open interest. So generally, if I were to do out the money calls, watch for what the open interest look like, and they're generally on the even dollar mark, so 4K, 4,500, 5,000 kind of thing. Of course, I understand you might be doing 4,600 based on the cost of it, and that makes sense too. You limiting your risk. When did you buy in? Up since 4:30. Hey, me too. High five, man. 4:30. Early bird. I love it when people wake up early, just because you get to spend time learning something. I don't know if you're learning from my channel. Hopefully you are. But how I came into trading, how I first started trading myself, is waking up at 4 o'clock, 4 to 5 every day, and then watching some YouTube videos on trading, and then maybe get a few trades in before actually heading off to my 9-to-5 job as financial planner. All those old days. Bought it yesterday. Yesterday. Okay. Yesterday, yeah. Break of the resistance. I can see why. I don't know the exact time you bought it, but yesterday is the break of that key resistance that we discussed at 35.54, 35.50s. So that makes sense. You're buying there, but you're gonna want to see that follow through. As I talked about, the only thing that concerns me a little bit. And over the long term, it's no. If you bought leaps, there's no real concern as of now. You might see a little bit of pullback before the. So the other way that the chart could work out is touch at 88 before coming to that all-time high resistance and then back test. No, that's too much. Back test around here before new all-time highs. So that could be the other way that the chart's going to work out too. So you might see a little bit of burning for premiums first, also because of how much is already ran. So I thought about buying it back here. Can't remember why I didn't. Oh, I wanted to see what the chart looks like for another day, and it just started running. So far it's already ran 9%. So it's not extended on the daily yet, and I really like the volume, the low bearish pressure, and then the strong bull volume. But ultimately, if you look at this, it is a decreasing. Come on. It is a decreasing bull volume the way it stands right now. So that's potentially losing a little bit of momentum. You're going to want to see that follow through today, regardless. The opening is at least very strong. Ooh, AMD looking sexy. Ooh, losing yesterday's low. Maybe not so sexy. How's Airbnb looking? Actually, we didn't talk about RK yet. We'll go back to Airbnb. RK. Look at the gap down. What is this? Reverse GP. The zones are pretty big here. Why are the zones so big? I want it lower. Still works though. So it won't change the zones for now. Support. Short-term support, but this is the ultimate support, so keep that. Gap down. After reversal, spinning top candlestick. Daily higher low to come. Our KPLTR is probably dragging it down a little bit. Wow, look at that. So GP does line up with this key support. I would anticipate some sort of reaction around there. And we are gapping down. So what I'd be looking for is... I want to see stronger bullish action. That may be too strong. Something like that. RK is going to be on top watch for re-entry, as well as Ying. One of the rare tickers out there right now. This is an ETF, triple leverage of China Bull. One of the rare ETFs right out there, or tickers out there right now that is gapping up. 2.3% up. What did I mark it here? Support, resistance. Okay. So we are holding that support. I want to see a break. So I'm going to set an alert on this because this is one of my top watches for the month, as well as going forward into the end of the year. Maybe a little bit higher. Yeah, so either one of these breaks. You know, if the lower alert breaks, you could think about playing Yang. What is it? YANG. That is a bearish side of this, so it's the exact same ETF but reverse. So as this goes down, just to show you guys as an example, as this goes down, this will go up. Okay, but I'm looking for the break of this upper alert. 1088, 89-ish, and it does, that would be where the 88 roughly is going to be as well. If it does, I will be looking for a bull entry for the long term, and let's just rediscuss why that is. So we look at this huge monthly descending wedge, triple bottom so far already, 851, 827, and this was 909. So we are seeing weekly hasn't seen a reversal yet. Daily has already seen a reversal. Well, maybe not yet. So we're looking at a daily higher low setting potentially soon before an actual daily higher high being set. Top chart. Amazing opportunities come, even if it were to just move up to the upper trend line. And my chart's stuck again. Even if it were to move to the upper trend line, just the upper trend line, we're looking at about 135%. Huge opportunity on yin. Yeah, Tesla is at 105. Might be the lowest. You need this bounce. Oh, I like those calls. Except you probably entered yesterday. Depending on when you enter yesterday, it's I hope you didn't enter too early. So yeah, congrats Wing for playing the bounce here. We even talked about it, thought about it. Yeah, I did not want to play bounces yesterday. But this paid Wing a decent week maker, I would say. Congrats, Wings. And then we thought about playing the bounce here, but did not. And this is a good thing that we didn't. Next candle was red again. So with the bounces, you want to try to wait for oversold conditions. And 4 hours not anywhere near oversold. Already is oversold, and we are gapping down. So there is a shorter, because it's only hourly, there's a shorter bounce to be played here. But I am not seeing a bull divergence, especially since we're gapping down. Yeah, so personally, based on all the oversold bounces I played, I've developed a rule list, and I'll share with you guys just a few rules that I want to make sure that they are all met in order for me to play oversold bounces. They are juicy as hell if you play the oversold bounces right. So first, most ideal, you're gonna want to see the 4 hour oversold. Second ideal, good enough kind of thing, is going to be the already oversold. And then on the shorter time frames, 15 minutes, I need to see a bull divergence for me to play oversold bounces. So with the way that it's gapping down, there is potential for a bull divergence, but along with the 15-minute, most ideal, same with that 4 hour oversold, I want to see a 30-minute bull divergence as well. So far, it looks like it might not provide a 30-minute bull divergence. And if you look at this, it's 30-minute 8 is obviously the guide. We gap down here, and then 30-minute 8 reject. Huge rejection. And then continue to come down, touch that 30-minute 8 again, and reject. Right? So oversold bounces, there's minimal opportunities. On this kind of thing, there's a whole lot more room to the 30-minute 8. That's why this one is a whole lot more ideal than this one for oversold bounces. And the way it stands right now is we're gapping down. You gotta keep in mind this 30-minute 8 will be lower as well. It does not give a whole lot of room for that bounce. You got in at end of day. Okay, that's good. Yeah, that's not so bad at least. Generally, for next time reference, I would recommend, it's up to you, of course. It's what my personal preference is, generally wait for the open and then see if there's slight selling pressure to play oversold bounces versus swinging overnight. Because on this type of chart, on a dark cloud cover, huge selling pressure, huge bearish volume. Generally, you should see a gap down, and that's what I was anticipating, a further gap down below 1,000. That would provide a little bit more ideal scenario for oversold bounces, just to reduce that overnight risk, as well as the likely scenario of gapping down. And next Wednesday. Had me all to yourself. Hey, thank you for watching, miner. Glad to have you here, man. Right, so market is, let's give it another 5 minutes. Let's take a circle back to the market, see what the market looks like. Huge bearish pressure to start the pre-market, bouncing, wicking from 15-minute 8, but there's lots of lower wicks so far on the 15-minute chart. 30 minutes, it is a lower high, a lower low. RD trend is bearish as well. 4-hour trend is now bearish as well. So what we used to do, for those of you that's in trading, our 24/7 trading chat group, you would know that we used to watch for 3 signs. First being the 30-minute trend reversal, and that was given yesterday. 30-minute trend reversal, RD trend reversal was the next one, and that was also given yesterday after this wedge bear break. And 4-hour trend reversal, same thing, it was yesterday. So all 3 were reversed yesterday. Little bit of a concern. 4-hour 8 seemed to be the shorter time frame guide right now. I'm gonna have to see if the open breaks over it and close over it. Nas still the weakest. Oh wow, we broke under the trend line now. Wait, no, it's already under the trend line. Yeah, okay, broke under the trend line, immediate back test, and now seeing further downside. Now let's focus on the right side of the chart. We forgot to do that. Let's focus on the right side of the chart. Is this right? No, it is not. Oh wow, how did I draw this in advance? 47.14.8. 47. I did draw this in advance. Wow. 47.14.8 was the anticipation of all-time high, and ended up being 47.19.4. 0.6 points off. Wow. Did anticipate it to be a little bit longer. All right, there we go. So it does line up now. Okay, so the fibs is lining up with support and resistance zones. So first we'll be watching this trend line, see what the reaction looks like. Well, 1, 2, there's multiple areas to be watching for. First one's going to be the daily 8. We're going to have to watch for that today, see what it looks like, or if we get a bounce. Second is the trend line. Third is the key one. I would anticipate ultimately we will be coming back down here to back test at the very, very minimal. Back test this previous high, lining up with 0.382. And then after that, 0.5 will be around this key zone. GP is going to be on that support resistance here. Multiple rejections, chopped around, support, slight support here, and a reject again. So those are going to be 1, 2, 3, 4, 5 areas we're going to be looking at. That's a lot of areas, but ultimately I will reduce these 2 and just watch for that 0.382, the 0.5 for early signs first. 0.382 should see reaction for sure. Right, I'm going to keep it at that for today. Thank you guys for watching. Hope you guys enjoy the content. Hey, if you like our content and if you think that anyone you know may benefit, whether it's friends, family, please do consider sharing with your friends, family. Hey, sharing is caring. Again, thank you for watching. Reminder, 250 subs giveaway. Watch out for that. I will see you guys in the next video.